This is part two of the video with the overview of my website. Do you have a portfolio that's made 100% all the way down to 25%? 5 different portfolios since last year, beginning of last year. I have. Let's take a look. Today is April 10th, 2024. All data you see in here is as of that date. So first we'll go to model portfolios. We're going to start with the one that's doing the best, which is Alpha Quants. This shows you the bar chart right now. It's got 100% performance since it began. It began in April of 2023. With Alpha Quants, I have a paid subscription to a quant website, as it says there, where I can see quant ratings. Now, based on those ratings and other criteria I apply to exclude certain stocks and guarantee liquidity, twice a month I select the stock I don't already have and the one with the highest quant rating, and I put it in my portfolio. Here is the criteria I use. This is similar to criteria that is used on a website by a paid service that I have subscribed to also. Basically everything in this portfolio and also in everything I do is from a paid service that I pay for. I don't use any free services. And as you can see, I have certain exclusions or restrictions. I only, in this portfolio only allow USA and Canadian headquartered stocks. I do not use subjective criteria for selecting the stocks. A lot of people do. They'll come up with maybe 5 or 6 highly ranked quant rating stocks, and then they'll apply their judgment, I guess you'd call it, to select the one they think is the best, but I don't do that. I select the one with the highest rating. And when I get a remove signal, I get rid of 100% of that stock, not part of it, like it's done elsewhere. And there's certain stocks I won't put into the portfolio. For this particular portfolio, airlines, crypto-related, biotech, or mega cap. And you can expect that eventually 30 to 35 stocks will be in the portfolio. Once I get to 30 stocks in the portfolio, I'll start reducing the number I do per month from 1 to 2, because I don't believe that the portfolio should grow much more than 30. And this is one way I'm going to use to limit the number of stocks in there so it doesn't get out of control. Basically, this is more of a long-term type portfolio. You can expect that the holding period of the stocks, once they're added, would be about 9 months to 2 years. The dividends, because it's a long-term portfolio, the dividends will be counted for both the stocks in the portfolio and the benchmark index. I chose the index EQAL, which is a Russell 1000 equal weighted, because the stocks in this portfolio are all added equal weight to the portfolio. There's no compounding, and it makes sense to compare it to an equal weighted index. And because the stocks vary from large cap to mid cap to even small cap in some instances, but on the bigger size, small cap ones, I thought the EQAL was most representative of the stocks that I'll be buying. Now let's take a look at portfolio details here. This takes me to the Google Docs, and here's the portfolio. Basically, in this particular case, this is the live version of the portfolio. The prices here are all current as of this morning, before the market opens April 10th, 2024. You see it's up 100%, and it's way above the index. In a later segment in this same video, I'm going to focus on this portfolio, and I'm going to go through all the different aspects of it, how everything is calculated. So I'm not going to do that here. I just want to point out that this buy and hold strategy for this portfolio has worked wonders. And as you can see, when it started in April 14th, 2023, It added SMCI when it was just above 100. The portfolio or the quant ratings still like SMCI, and it's basically a hold now, and it's up 700% or thereabouts. And who knows if it's going to go up more or down, but I'm not going to be removing this from the portfolio until the quant ratings tell me it's time to remove it, which someday down the road, could be years, who knows, it will tell me that and I will remove it then. But until then, we're going to try to let this winner win. And it's not the only one in the portfolio like this. You can see there's several others at over 100. ANF, Abercrombie and Fitch, I believe. CLS are both up 100. Modine, is up almost 100. So there's quite a few big winners in here. And there is some sales. The quant ratings have issued a sale on 5 of the stocks that were added in there. And as you can see that some had a pretty big loss, like this one here. And some had fairly good gains, like Uber and Marathon Petroleum. But I don't use any subjective criteria here. If the software says buy it, and it's the best stock on my list after I apply my criteria, as far as the quant rating, I'm going to get that one. And if it says let's get rid of that stock, and it doesn't matter if it's up or down, it's going to go. Okay. So that's the Quant Alpha portfolio. So let's take a look at number 2, which is biweekly swings. This one's updated once every 2 weeks. There's quite a bit of turnover in there because it's updated more often than my other model portfolios. And the type of stocks in here are mid cap, small cap, micro cap. And because it's updated so often, I boosted the liquidity requirements for the stocks that qualify in this one. And in this one, basically, they're very liquid. Now, the thing about this one and all the other model portfolios I'm going to talk about is that I have a software program which I've customized the screener on it based on the criteria that I thought would work good. And it gives me a list of stocks every time I run it that qualify. And also, by default, it tells me which ones don't qualify. So when I decide to update these portfolios, I run it, get the list, and compare it to what I have and make changes accordingly. I always do a little due diligence on the list just to make sure that there's enough liquidity. I also make sure that there's no buyout news on the stock, because if there, for instance, if there's a offer that's been accepted, then we're in an arbitration situation, arbitrage, and that means we have limited upside expectation, but still a very large downside potential if the deal falls through. And the only stocks I want in this portfolio, or all the other portfolios, are stocks that have unlimited upside potential. And that's why I wouldn't select it if the software selected one like that. It does happen once in a while. And also, if I determine that the software selected a stock that, since it had in the portfolio, there's been a buyout offer, been accepted, and the stock is already trading pretty close to the buyout offer, that's an arbitrage situation too on the other side. In that case, even though the software may say, oh, you need to keep that one, I'm probably going to make an executive decision and say, okay, I think we need to let that one go and capture that money and put it elsewhere, because we don't want to be involved in any arbitrage situations. We want unlimited upside potential. So this one is compared to the BSMAX index. And the reason I did that is looking at the past history of this portfolio. I determined that about 1/3 of the selections were mid cap and about 2/3 were small cap and micro caps. And this particular index, BSMAX, is perfect for that, because that's about what they have in their fund: 1/3 mid cap, 2/3 small cap. It's a high turnover every 2 weeks, like I said, and the liquidity requirements are boosted for this one compared to some of the others. There's a back test. Back test for this portfolio outperformed both the IJR and MDY benchmarks, which are the small cap and mid cap benchmarks, in 15 of the 19 years tested. It underperformed in 3 years. As you can see, it was largely even with those in 2017. But when the portfolio outperformed, it was usually by a wide margin. The best year was 2016, when it was up by 86%. The particular index I chose to benchmark against, the BSMAX, does not go back to the year 2004, which was the start of my back test. So I can't use it for comparison purposes. So let's go take a look at the portfolio detail. Now here you can see that this one is up 67% since it started, which was at the beginning of 2023. It's a really good result. It's got lots of very good stocks in there. And well, I think the biggest one here right now is this one here, VIRC, is up 61%. It's been in there since October of last year. It tends to hang on to the winners for quite a while. The losers, it usually lets them go pretty quick. I'm talking about the software program. I don't decide anything on this. This one right here, you might see it has a date here, and that's because Google Docs does not update that ticker properly, so I have to manually put that in there. So as you can see, this is as of the 5th, the prices, and that's as of the 4th. And over here, you show some of the big winners. One of them was Root, which was sold to 196% profit. The software said add it in November, and it said let it go in February. So that's what we did. Another one is NSSC, same kind of thing. Picked it up in October, let it go in March. And as you can see, it's got a fairly good track record there. You go down through there, and of course there's losses too. They don't tend to be that big, but it could always happen. You see, going all the way back, it picked up CLS in April of last year at 11.89, and it sold it for 89% profit. Had it for looks like 4 months. Kind of wish still had that one, but the software said no. Let's get rid of it. And a quick pop was AAOI, which it got for 7 something in August, and then just 2 weeks later said we got to let that one go. So it made 85%. Let's go to the next one. Probably the next one I'm going to do is small cap discoveries. This one is also, the picks are generated by the software that I have. It's been back tested just like the others. The thing about the small cap discoveries is the stocks are small cap and they're smaller, and the liquidity is limited. So if you ever want to do market orders on these stocks, you have to be careful. And if you was to say, oh, I'm going to buy $1 million of that stock at the open, well, sorry, you won't be able to do it. Just be cautious. So this one has a very good track record too. You can see it's up 50-something% since the beginning of 2023, and these are small caps now. So since then, beginning in 2023, the small caps haven't done all that great. Over time, they do pretty good, comparable to the S&P 500, but they come in and out of favor, and they're out of favor right now. But I can only imagine if the small caps come back in favor, how much my portfolio here is going to outperform. It's probably going to be pretty good. That's what the back test shows, is when the small caps are in favor, the portfolio does even way better. So I have some information about it here. There's a back test. It outperformed the IJR small cap index in 15 out of 19 years, and these years here, it underperformed. And in the best year, 2009, that's when we had the big rally after the 2008 financial crisis, it was up 127%. So let's go take a look at it. Okay, shows it up 56%. And here's the stocks currently in the active positions in the portfolio. You can see that HRTG is looks like it's number one, 93%. Bought in August and still has it. BIRC, another one. This one is added in September. It's up 87%. Then over here on the closed position, you can see the big one was Root. It had a home run on that one. Root was added in January of this year, and then 2 months later, the software said let it go, and it was up 493%. Now, obviously, between then, I had another update, and at the time, the software said hang on to that one. I think it was already up some. Good thing it did. This is a good example of letting your winners run. But in my case, I always follow the software. TSAT was another one that had a pretty good increase. Was added in April of last year and let go in January. I believe that this one was, if I'm not mistaken, this was the one that I made an executive decision to let it go because it had a buyout offer that it accepted in it was a cash offer, I believe, and the difference between the TSAT price at the time to the cash offer was less than 2%. And in those situations, I like to override the software and go ahead and remove it, capture the money, put it elsewhere, because I don't like the arbitrage situations for these portfolios. I want unlimited upside. If I can't get unlimited upside, we're going to look elsewhere. So anyway, that's an overview of that one. Let's go to the next one. We will go to Canslim Growth. Oh, didn't go there. Oh, here we go. All right. I must have clicked the wrong one. Canslim Growth, as you see, is up 30-something%. And it is following the Canslim principles. Now, William O'Neill has a book about Canslim, which is very successful, and he made a lot of money using the criteria. Other people use it and have success. And I try to adopt principles in there. Now, on Canslim, there's some of the principles are subjective. And I can't use those because my approach is completely automated. And some of the principles, the points that you need to look at, I can't backtest them. So I can't put them in there. But the ones I could backtest, I put them in there, put in reasonable values that I'm looking for. I came up with a criteria and put it in there and did a backtest and looking good. As you can see, the backtest was over the index, which is IJR, in 18 of 19 years tested. It's pretty impressive, pretty consistent. And it was largely break even in 2018. The best year was 2013 when it was up by 46%. So you can see it's kind of consistent. In 19 years in the backtest, it actually didn't trail the index. That's a pretty good track record. I chose the IJR small cap index as benchmark because in my testing for the back test, vast majority of stocks that qualified were small cap. But unlike the small cap discoveries, these stocks that qualify in the Canslim are generally a larger size small cap and not as small as the small cap discoveries selections. Let's go take a look at the portfolio. And this is one that's updated every month, once a month. So as you can see, the biggest one in here is NSSC, up 112%. And it's up 38% total from its beginning of 2023. If we go over here on this side, you'll see that CLS is one of our big winners. It was added in March of 2023. The software retained it all the way until February. And then it gave a signal that I followed, that it needs to go. And so that's why we ended up at 226% profit. So this is a very good example of let your winners run and don't stand in the way of success. Now, what would have happened if on the stock like this, if you had some sort of rule that once you add the stock or purchase the stock, when it was up 20%, you had to get rid of it? Well, you wouldn't see that gain. All well-performing stocks many times are going to be up 20% from any point in time. And if you had a rule that you had to sell it every time it did that, you would never have a big gainer. That's all I'm going to say. So let's go to the next one. So let's see, we will do large cap stalwarts. Large cap stalwarts is very liquid. They're all large cap stocks. There's been a back test performed. This results of this one on the back test are not as good as the others. In fact, of all the others that I am showing here with back tests, it's the least impressive. It outperformed in 12 out of 19 years. It underperformed in these, 6 years? And it was largely even in 2010. And its best year was 2017, when it was up 44%. But this is a portfolio. And like any portfolio, you have to give it the benefit of time. Over time, it does pretty well, but you got to wait for it. And there's going to be times when it's not going to do that great. There's going to be times when it does great. Right now, it's doing pretty good. For a while after I started it live in the beginning of 2023, it was struggling. In fact, it was behind the benchmark, but it's come on strong. And I have to say that it looks like one of the reasons is that the software decided that it wanted to buy or add several of the Magnificent Seven stocks. It added Meta in January. It's up pretty good. And added Amazon in December. It's up pretty good too. And it also added Netflix. I don't know if that's a Magnificent Seven or not, but I know it's kind of a high flyer. It's up reasonable. And so they've contributed some. Of course, these are all equal weight. So it's not like S&P 500 index where it's cap weighted, and these stocks like Meta are going to be a huge portion of the index. In my portfolio, they start out the same as all the other stocks. So you can see over time there have been some successes, some losses. Lately, it's been pretty good. Lots of very big stocks in there, like JPM, which is JP Morgan, I believe. NVIDIA, it had it for a while. Unfortunately, it let it go. Oh boy. But it got it at 455 and then let it go 3 months later. This is before it really took off, I guess. And there's losses too, of course. And with all these portfolios, you're going to have some losses. When you have a loss, you have to be willing to let it go. And this portfolio or any other portfolio, when your criteria says it's time to let it go, you got to let it go, even if it's at a loss. And when criteria says you got to keep that one, even though it's up, way up, you got to keep it. You got to give them a chance to win for you. And you don't want to be bogged down by your losses. All right, one more to go, I think. Here we go. The mid cap is made up of around 20 stocks, and because they're in the mid cap, they're pretty good liquidity. Shouldn't be a problem in doing market orders at open or close. The back test, I had it up beating the index, which is MDY, the mid cap index. 15 out of 19 years tested, underperformed in 2 years, and was largely even in 2 years. And when the portfolio outperformed, it was usually by a significant margin. The best year was 2005, when it was up by 46%. Now, this was so far, it's performing okay, but it's right in line with the MDY index. That's not what I'm looking for. I want to beat it. It's not beating it at this point. But the back test shows that over time it will beat it. So we just have to give it time, be patient, and wait it out. Now, I'm not going to show the portfolio detail here. If you're interested, you can come on the website, take a look. It's just going to show somewhere up, somewhere down, kind of going sideways. Now, later, I'm going to do a deep dive on Quant Alpha's Google Docs to show you how I put the numbers together. And so hang around in the video for that. Now, I've gone down each portfolio and I've described them in hopefully good detail. I'm hoping that you'll get a sense of what my website has to offer. Hopefully it's of value. If you find it's of value, then please subscribe to this video channel, and also you can subscribe to the website, which is free, and hopefully you'll find that the information I'm providing is useful to you. Hello, I'm going to show you how my portfolio Quant Alphas is constructed on my Google Docs. We're going to go to it through my main website, SwingTrader.Trading, Model Portfolios, Quant Alphas. This section of the web page has information about Quant Alphas. We'll cover that at a later date. But I want to go to the Google Docs tab for this portfolio. And we have a bunch of information here. We have active positions, closed positions, a calculation on the left side of where the portfolio is since it started. The portfolio started April of 2023. Since it started, it's sold, or actually removed, not sold, 5 stocks. The last one was MPC, which is Marathon Oil. That was a few days ago. So over here is our active positions. And there's, I think there's around 24 in there. And the last one to be added was Cardinal Health, CH. And it's got off to a little rocky start, down 3%. And today, by the way, is April 9th, 2024. And this portfolio is up to date as of this date. But when you see the video, it may be a few months later. And the numbers have changed since I did this video. It could be the portfolio is higher, or it may be lower. Who knows? This is how it works. Up here, you have the active percentage, which ties down here to the total. And you have the closed percentage, which ties over here to the closed positions. Then you have your total. And then here we have the average transactions per month. And how that is calculated is over here. Number of positions each month. We total them up, divided by the total number of months to get the average per month. All the transactions in the model portfolio are equal weight when they're started. So if you want to look at it as an example, let's assume $1,000. So in the end of April, you would have had $6,000 invested, and now you would have $24,000 invested. And so that's why we get an average, and then get the average per month, because first of all, we had more than 6,000 invested during this whole time, and yet we had less than 24,000 invested during this whole time. So a fair amount is to average over the months to get, and 16.2 is the number. So you take this number here, divided by that number there, and you get your percentage that the portfolio is up based on the dollar amount. This is the benchmark index, which is EQAL, and that's where that number comes from right there. I have a bar chart, which is over these two numbers here. Give you a bar chart, and then elsewhere in the website, I show the bar chart. And when I do a monthly update, I put it in or a bi-weekly update, I put in the update also. that's pretty much all there is to it. I'm going to have other videos which tell you more about the portfolio, but this is only to tell you about how the tab is constructed and how to calculate things and why things are the way they are. Well, about to wrap up this video, and I hope the deep dive I did on the Google Docs is useful. It shows how I calculate everything. I try to be fair. I try to be accurate. Of course, there's always an oops here and there. If I find out about them, I fix them. I try to present it in a way that's easy to follow. If you like it, then please subscribe to the channel and subscribe to the website. And I do continue, or I plan to continue, to have more videos. Basically, from now on, it's going to be when I do an update to one of the portfolios. If I feel it's of interest to the YouTube community, I'll create a video, and then we'll just see how it goes from there. Bye now. All content on this site is for informational purposes only and does not constitute financial advice. Consult relevant financial professionals in your country of residence to get professional advice before you make any trading or investing decisions. I have a disclaimer on my website, SwingTrader.Trading. Please review it if you're going to go on the website. Thank you.